We will now hear oral evidence from Natalie Sini, CBE, Chair of the Access to Cash Group, and Martin Kopak, Director of Fair by Design. For this panel, we have until 3:10 p.m. Could the witness please introduce themselves for the record?
I'm Natalie Sini. I authored the Independent Access to Cash Review 4 years ago, and I now chair the Cash Action Group, which is leading the industry work to provide a voluntary solution prior to legislation for providing access to cash.
And I'm Martin Kopak. I'm Director of Fair by Design at Barrow Cadbury Trust. We exist to eliminate the poverty premium. That's the extra costs poorer people pay for essential services. I'm also a Commissioner on the Financial Inclusion Commission, and previously I used to be a regulator. I was responsible for setting up the FCA's approach to consumer vulnerability and its engagement with third sector organisations.
Thank you. I call the Minister.
Thank you for the work that you do. I'd just like to open the conversation for the benefit of the committee by rehearsing some of the interventions. We all represent constituents, and this is obviously a concern across both sides of the House. What are the mechanical options for example, a diligent Member of Parliament if they are concerned about access to cash in a particular location? You just talk us through that.
So the voluntary scheme we set up, we very much modelled as if the legislation as currently drafted in the bill is implemented. So the model we set up starts with a community need base. So the premise is all banks will have a responsibility to serve their business and retail customers, and if they're not doing it through their own branches, they've got to do it through another means. So the mechanism we've set up is that anyone, any MP, any member of the public, can request that their community's needs are reviewed. That's done independently by Link. The form is very simple, it's free to fill out, it's on Link's website, and Link are already getting applications. Equally, every single time a branch is closed or an ATM is closed, Link will review the needs of that community, and if the needs would not be met, will consider a new solution. And that's already led, so far since January the 1st, to 25 new hubs announced, 13 communities where we're going to explore pilot services, including deposit services, and Link have set up a significant number of ATMs. I haven't got that number to my fingertips.
Okay, that's very clear. So there's a solution out there in the marketplace. What are the benefits as to this industry-led initiative versus the legislative approach? And where do you think there are any gaps, if there are gaps, if there are any?
I mean, to be honest, we need both. So there is a real competitive challenge for any bank that wants to go beyond what's necessary, because if it does that, it could be accused by its shareholders of wasting shareholders' money unless all its competitors do the same. So to be fair, it's the threat of legislation that has made everyone say, why don't we work together? So we do need this legislation for the industry scheme to continue in a viable way. But actually I'm really pleased that the industry has stepped up in advance of legislation, and we've worked hard not just with the banks but with consumer groups and small business groups. So the scheme we've designed truly does have the input of everybody, and we've run pilots for the last 2 years in communities to test our models and really test their work with really high satisfaction rates. So we need both, but I do think the scheme we've designed means that when the legislation is passed, we are ready to go. There won't be a gap.
Okay, thank you. I think you may get an invitation to some parts of the country. No, nothing further.
Thanks,
Sharon.
Dual proceed.
Thank you. Thanks very much for coming to give evidence to us. And my first question is to Natalie Sini, and it's about the overlap between people who need access to cash and the people who require face-to-face banking services. So I want to ask you a bit about the overlap between those two pools of people, if you like, but also whether you think the legislation in the bill does protect banking services I have a different question for Martin Coppack, but I'll come to you later, so I don't know if you want to go first.
No, it's a very, very good question, and I'm conscious that every time this issue is debated in Parliament, or frankly every time I meet a community, the debate goes very, very quickly from cash to banking and then all merges. And the reason is we are talking about the same population.
Yeah.
So if somebody needs to get face-to-face support with their money, that might be about getting money out, it might be paying money in, it might be a standing order, it might be the fact that a payment they've expected hasn't arrived. It's the same demographic group. Now, we've recognised this in the voluntary scheme. So when we set up a banking hub, it's not just got a counter where you deposit cash and get cash. There's also a private space where the banks are providing a community banker to do those basic banking services. Now, as far as the legislation is concerned, I mean, the voluntary scheme we've set up will cover that need on a voluntary basis. I think one challenge, if you want to include this in the legislation, and I'm going to stay neutral on it because of my members, the consumer groups and small business associations would say it should be included, and the banks would say it shouldn't. So, but if you do want to go there, I think defining what you mean by banking service, face-to-face banking services, and particularly essential services, is really important. So I don't think anyone would expect you to be offering wealth management or buy-to-let mortgage advice on every high street. But helping someone when they're stuck because a payment hasn't arrived or they've got locked out of their account feels different. So I think keeping that definition tight would be really important. Would also be a question in my mind about whether the FCA actually have quite a lot of the powers they need now already. So I think they're the factors I would consider.
Okay, thank you. And a question for Fair by Design. It's about the additional costs that people on lower incomes face, the so-called poverty premium. Do you think the legislation in the bill does address this, the poverty premium, or do you think it could be strengthened?
Absolutely not. So in terms of, I've worked in this sector now for 20 years, and we've got the biggest opportunity right now to make a systemic change to how people who are excluded are addressed both by the regulator and by government, and we need to take it. Recently I provided evidence to the Treasury Select Committee, who supported our call for a must-have regard to financial inclusion for the FCA. Importantly, alongside a requirement to publish once a year the state of financial inclusion, what it can do, what it can't do, and who else can't. And that is so important. If I can just give a little bit more context about why that is so important, I'd appreciate it. Thinking about where we are at the moment, governments from all different colours over the years have asked people to take responsibility for their own financial affairs. Be a good citizen, look to the market, but whether that's saving for a rainy day, saving for your retirement, protection products or insurance. But what happens if the market doesn't want you? What happens if the market says to you, you're a higher risk? Actually, you're more costly to serve. So we're either going to make our products more expensive for you, or we will just exclude you. And I think everybody can recognise that situation. With competition-driven markets, I think we can all agree that firms will naturally design products that are profitable. And that's okay if it's not an essential service. But if it's basic financial products and services that everybody needs, some intervention needs to happen. And what's happened over the last 20 years or so is we're asking amoral markets to make moral decisions on who gets what product and at what price and who gets excluded. And the biggest issues around the financial exclusion area, which aren't touched by the FCA's consumer duty coming out or its consumer vulnerability guidance, the biggest issues are those that look around income, when people cannot afford a product. And I'm going to give one example to bring this to life. Insurance at the moment. I know we've got Craig, and we've talked about this before, Craig. Increasingly, insurers are becoming ever so good at finding individualised risk per person. Technology is great for that, but as a rule of thumb, the market works really well if you're healthy and wealthy. If you're not wealthy, if you're not healthy, you're a higher risk. And increasingly, you are asked to pay more for your insurance product. We know, for example, that people in poverty pay about £300 more a year for their insurance because of their postcode. And they pay another £150 a year on top if they can't pay up front, have to pay monthly. Now, these figures, these issues go across insurance, Now, myself and many of my colleagues in different organisations spend all our time going to the Treasury saying, this is an issue. The Treasury will say, you haven't got the data, go to the FCA. You go to the FCA, they say, oh, pricing of risk, it's kind of social policy, not for us. Go back to the Treasury. Then you go to Competition Markets Authority, then the Equality Human Rights Commission. Everybody points back to the FCA is the only body, often by law, can get access to this information, but they refuse to because it's not a priority and it's not within their scope. So what we are saying is simply give a must-have regard to financial inclusion with a requirement to publish not to do social policy, but to actually allow the consumer organisations to have a conversation about these issues that have been going on for decades. And actually, as an ex-teacher, I've got a handout which explains it in one slide. Thank you.
Thank you. Thank you.
Dr. James Davis.
Thank you very much. Yes, and many thanks for all of your work in this area. I'm interested in your thoughts on the increasing number of businesses refusing to accept cash. If that becomes commonplace and we enter a virtually cashless society, is that not going to pose a risk, particularly for SMEs, if the payment transaction costs rise, for example?
No, and it's a really, really important question. In fact, when we look at some other countries, that's been the real crisis point. In Sweden, for example, the crisis point hit when shops really stopped taking cash, because there's no point, if you're dependent on cash, having it if you can't spend it. Now, what I would say is I've spoken to literally hundreds of small businesses. The main reason that small businesses don't take cash is not hygiene or anything else like that. It's the ability to bank cash. So if you go back 3 or 4 years, a small retailer used to shut up for 10 minutes at lunchtime, pop over the road, deposit their cash in the bank, pop back. What they might now have to do, with the local bank 20 miles away, open between 10 and 3, shut up for an hour, in the peak of the day, drive, park, queue, drive, back. No wonder many shops say, you know what, it's only 20% of my customers, I'll go cashless. That's why in this legislation, deposit facilities are just as important as cash access. And it's an area where, frankly, the industry is behind. You can have deposit-taking ATMs. They're just as well tested as ATMs that issue cash. We don't yet have any mechanism in the UK for third parties using them. It's something I'm working with the industry to solve, but this legislation is utterly critical, because I believe if small businesses can deposit cash easily, most will keep taking it.
Mm-hmm. Thank you.
Siobhan Lecter.
Thank you. Can I ask just both our witnesses, do you agree that there is a societal duty for the government to ensure that the most vulnerable people in our society have free access to cash?
Yes, I do. The one thing I'd say as you consider the drafting is this bill covers small businesses as well as consumers. Small businesses typically, by their contracts, do pay for their cash access. So I think as you draft amendments, limiting it to retail consumers is going to be important. I don't think there's any appetite from the banks to want to charge for cash access, so I don't actually think you get any opposition from putting that in either the legislation or empowering the FCA to take it through to regulation.
Martin?
I mean, there's absolutely a need for this. Bearing in mind the audience for today, I did a little bit of research and looked at the poverty premiums at a constituency level for different MPs, and it might surprise you to know that the typical parliamentary constituency loses £4.5 million a year in terms of the poverty premium. So that's money that could be going to your constituents' pockets, and we've linked this to research that shows the poorer you are, the more likely you are to spend that locally. Now, the reason why I'm talking about this right now is, well, as well as it costing $2.8 billion across Great Britain, the poverty premium exists very much for people trying to access cash. So if you were to live, let's just say, in Vale of Clwyd, the Conservative constituency of Vale of Clwyd, people are paying about £40,000 of your constituents to access their own money. And if, for example, you were in Kingston upon Hull, West and Hessel, you would be paying around £70,000 to access your own money. And then, say you lived in the SNP constituency of West Dunbarton, can't say it, just Dunbarton. I should have practiced that before I came. People that in your constituency are paying £64,700 to get access to their own money. hopefully that's a good representation of why we need to tackle it.
Craig Tracy.
Thank you, Chair. Martin, as you alluded to, you very powerfully gave evidence to our APPG last year on the poverty premium, and I think that was off the back of a report from the FCA. Said there was about 27 million people with characteristics of vulnerability, and I think most of those were around buying insurance. I just wondered, since that, in those 12 months, has any progress been made? And also, one of the areas that we talked about, as much as access to cash machines on the one hand, when you're looking at things like insurance, it's actually the digital disadvantage, which is a problem. There seems an ever-going push to push people online, and as much as you're a former teacher, I'm a former insurance broker, and I think the benefits of that advice, particularly to vulnerable customers, shouldn't be understated. And I just wondered, what are you seeing now over the last... And Natalie, if you've got, obviously feel free to pitch in.
Yeah, well, unfortunately, not a lot of progress has been made. We've had numerous conversations with Treasury, signposting to the FCA, and sometimes in the same room having that conversation about if we don't have enough data, which we cannot get hold of, because it's firms have their own data on insurance and how it's distributed and how the calculations are made. Unfortunately, nothing can be taken forward. We've done a second piece of work. We did one with the Institute of Faculty of Actuaries, who agreed there's a real poverty premium issue here. We're doing a second report now with Social Market Foundation, calling it again for the FCA to collect the data, and then for the Treasury to really understand how far is this a market problem and regulation can tackle it, and how far is it a social policy problem and social policy makers can tackle it. But we cannot get further than that. And I've probably had this conversation for the last 10 years. In our world, and as an ex-regulator, if it doesn't get measured, it won't get done.
Is there anything to add?
No.
Well, just with that in mind then, if I just do one quick follow-up, is that, with that in mind, is the FCA the right person to have a remit for financial inclusion? And if not, who should?
So really importantly, we're not asking the FCA to do social policy, and it would not allow it. What it is doing is closing that complete spiral, and there's 70-odd organisations who've signed our call for this, and some firms as well. What we're trying to do is to try to close that loop so we can have conversations about the most difficult things that are affecting the poorest of your constituents. That's all we're trying to do, and that's what I would urge you to support.
Thank you.
Emma Hardy.
Thank you, Mr. Chairman, and thank you both for your work in this area. Martin, you may have heard earlier Sheldon from the FCA sort of trying to reassure us all that we don't need to have regard for financial inclusion, that it's all fine, nothing to see here. I just wondered if you could sort of elaborate on what difference would it make if the FCA has a have regard for financial inclusion to the lives of people facing financial inclusion, and can you provide any examples of the interventions that the FCA could make if they actually had this regard? What difference would it make? Because as I say, the FCA is saying it's all fine and we do something anyway. And they also pointed to, of course, the consumer markets and how that was their answer. So if you can sort of...
The question was a bit there, Emma, and remind me if I don't get them all. First of all, the FCA will talk about the consumer duty and the consumer vulnerability guidance. Neither of those touch anything to do with income. Consumer vulnerability touches lots of things, like if you lose a partner and disabilities, which is great, but if you're looking at income, it does not touch any of it. In terms of, I've had numerous conversations with the FCA, and they're saying they're not supportive of this, but they do recognise the issue and have not come up with other alternative.
Yes.
In terms of examples of how this would have worked in the past really well. So, well, I'm going to actually a current one. How long has Natalie been trying to get some action here on access to cash before the infrastructure absolutely wilts away? It's a race against time. I was in the FCA 10 years ago, whatever, and I've seen all the letters going between the government departments and the FCA. Let's not touch that, it's not in our remit. So that's a live one right now. Past ones, the loyalty premium insurance, everybody knew it's an issue. It took citizens' advice to have to get all their resources together to do a super complaint to get any further on the loyalty premium in insurance. Access to cash and branches, access to basic bank accounts. Sean Williams, Tony B. Hall was going at this for years before we got any further. These are the types of interventions that this would allow. And in terms of the difference at the ground level, well, I could go to a few more parliamentary constituents here. So, for example, this would make a huge difference if we were trying to tackle the insurance poverty premium of 500 million to your constituents, James. It would make a difference of 1,300,000 for your constituents, Emma. And I can go on. But also, just one other quick thing in terms of when we talk to people in the community, they do not have a clue why the market is why it is. People like me can say cost to serve. It's a rational way of the market working. But you ring up and say, I want car insurance, and they say, don't serve you, it's your postcode. I've had people say, I cross the road in Glasgow, my life expectancy goes down this much. The same goes up in terms of my insurance. And people saying they're lying on their insurance forms, putting different postcodes on because they need their car because they're disabled. This is how consumers react to a system that doesn't work for them.
You mentioned the letter before and the number of people supporting the Have Regard for Financial Inclusion. I wonder if it's worth sort of sharing with colleagues who are the people who support this Have Regard for Financial Inclusion, and I wonder if they elaborate on the reasons why they've supported it, because it isn't just, even though you're a wonderful spokesman, it isn't just yourself that's supporting this, is it?
I mean, we've got Martin Lewis on board, for example. That might surprise some people. We've got Andy Briggs, Chief Executive Phoenix Group. We've got Lord Holmes Richmond from the House of Lords. We've got Legal & General, Group Chief Executive. And as well as other organisations you might expect, such as Citizens Advice. But you know, this is about 70 odd. This is not a niche area. People see it and see the need for it. It's not just fair by design.
Thank you.
Yeah. Martin Hughes.
Thank you, Chair. Maybe I think both of you agree with what I'm about to ask you. Would you agree that those most in favour of a cashless society are those with the most money in their bank?
Yes.
And if you look at other countries who are far more digitally enabled than the UK and Northern Ireland, notably Estonia, I'd like to declare a non-pecuniary interest as the chair of that all-party group. The vast majority of Estonians who do use more or less a cashless society believe that a cashless society, or access to cash, should I say, needs to be supported with the infrastructure that you mentioned earlier on.
No, I think that's absolutely true. I mean, one thing I would do, maybe to connect to the points Martin's made, wouldn't it be nice if everybody could participate in a digital society? And I think there is a risk we sort of talk about protecting cash for its own end. The reason we're talking about protecting cash is because the most vulnerable need it, because it works better for them than digital. We also, in parallel, need to work to a society where everyone is included in a digital economy. If you're dependent on cash, you shop locally, you can't shop online, means you pay more for your goods and services, can't do direct debits, you've probably got a prepayment meter. Actually, your costs of living, if you live in cash, are much higher. But the people who use cash are not stupid. They're not doing it because they haven't worked that out. They're doing it because they haven't got a choice. So I think in parallel, and that's not covered by this bill, but it should be something that we collectively work on post this bill, we also need to work on how we include everyone in a digital society. And that's broader than financial services. I mean, there are 4.5 million people in Britain that don't have any kind of smartphone, 1.5 million people haven't got any broadband or mobile connectivity, 1.3 million people don't have a bank account. So there's some bigger societal issues to tackle, but we've got to really make sure this is an inclusion debate.
Thank you.
I think that it will be the last question. Stephen Hammond.
Thank you. You mentioned that you were a regulator, and I think I heard you say a moment ago that if it doesn't get measured, it doesn't get done. Therefore, I'm keen to understand, you've obviously looked at the bill in its total, the need for metrics on net zero, competitiveness, proportionality. Do you think that there's enough in the bill and that's testing enough and stretching enough? And do you think there is enough transparency on the regulators to show that they've met those metrics?
I'm sorry, I just don't feel quite qualified to answer that one.
Okay.
Gareth Davis.
Martin, I should very want to quickly ask you about all the data you've been listing in the evidence. I take this evidence session very seriously. I think it'd be really helpful if you could share the constituency data, but importantly the workings. Can you just confirm that the way in which you're you're working out the poverty premium isn't based on a best case counterfactual.
So what do you mean by best case?
Well, it's either based on a best case counterfactual or average consumer's cost. So which is it?
So we've got a whole list. We did it with Bristol University, and we do a range. We work out an average, and when we've got figures that go up to much higher basis. It's like 1 in 10 of people in poverty would have a higher one. We've got a whole range that we can present to you.
Is that on? But is it on a best case counterfactual? The data you've been rattling off today to all of us. Is that data specifically on the best case counterfactual, or is it on an average cost per consumer?
I'm not quite sure what you mean by best case.
So you could, maybe write to me with your workings, and we'll go from there. But if you're going to rattle off data at an evidence session like this, it'd be important if you knew how that data was calculated.
Yeah.
How they've worked it out.
And it's actually published. It's done by Bristol University Personal Finance Research Centre.
Okay.
Yeah.
It still doesn't answer my question. You're going to come to a committee like this, please provide your
Right time. Order. I'm afraid that brings us to the end of the time allotted for the committee to ask questions. I thank our witnesses on behalf of the committee.